All right, what's up, guys? Welcome back for the day trading recap video today, and we are finishing green. We are up 277 and 17 cents, so nice solidly green today. I did take bigger share size today on some positions. I had two positions that were about $13,000 position size, which is beautiful. That's exactly on A plus setups, that's exactly the size that I need to be taken to be a little bit out of my comfort zone and kind of challenge myself a little bit. So today, here's my stats on Trade Journal. I'm going to be putting out a video soon on Trade Journal. It's actually the software platform, trade analytics software platform that I'm going to be transferring to from TraderView, and I'm going to be doing a video on that on Saturday. It's already filmed and uploaded. It's going to go live on Saturday, and that video is going to go over everything that Trade Journal has to offer. Really, really cool platform. I definitely advise any traders to check this out. You can get a lot of value out of it. So without further ado, let's go through these the stats real quick. Average win, average loss, 1-to-1. We have my win-loss ratio, beautiful. 61% is right, a little bit under my average, but it's right on spot. I want to be between 60 and 65% with minimum 1-to-1 risk reward. That seems to be where I am in average, so I don't want to be too far out of that average. Largest winner 223 and largest loser 86. So really good. And my largest winning trade was on my biggest share size of the day, about $13,000 position size on an A plus setup. So really, really good. Right here, 2,000 shares on Beat, $12,800, a little bit over that, and walking away with 223 in that trade. So good, really good. And we had another one on Beat, but it wasn't a winner. It was a small loser, $15 loss. So really good to be able to manage that risk on big share size, especially when you're taking big share size. You need to have really tight risk management and not be afraid to cut it, because those big share size, if you take a big loss like that, like I did yesterday, I was on max size and it got caught in a 10% flush. And if you can't be quick to cut it, man, you're gonna be in for a rude awakening. And I took on my biggest position ever, took a 10% loss, halted down, held through the halt down, had $1,000 swing in my P&L, the biggest I've ever had. And man, that was a shock to my system. That really kind of ruffled my feathers, really kind of just dug up the emotions in me. Really had a troubling day, just as far emotionally, just like kind of dealing with, just negative thoughts about just losing that kind of money, and thinking about all the would-haves and could-haves and should-haves. But I try not to let that last too long. I try to get through that real quick. Try to keep it as short as possible. Be with it, and understand the loss. Review the loss. And then review my entire metrics, not only the losing day, but all of the days previous, that I'm still someone who's been green for so long and is still consistently profitable. It's just one minor hiccup along the way. That's how I have to keep in perspective, instead of just being so fixated on that one trade that was a 10% loss. Yeah, very unfortunate, but the faster I get over, the faster I can accept it, then the sooner I can get back on the horse and get back to getting consistently green every day. So anyways, that was that. And we will go through the trades. I took some trades here on MOTS, ATXG, KIT, and TLRY, but those are all irrelevant. I only had 1 or 2 trades in those. Very irrelevant small scalps, but I will focus on Beat and SNTI, which is going to be in my live video that I'm going to show. All of my trades there on Beat and SNTI. One thing though I do want to note is I walked away on SNTI right around here, right before this big flush, and it started ripping up again, and people were starting to call it out. And at this point, I'm up 300 on the day. I'm feeling great, perfect, great green day after a nasty loss yesterday. And so I'm ready to walk away, but I couldn't help myself, and that's what actually kind of disappointed me a little bit. Kind of got me a little bit aggravated at myself, because I actually ended up coming back around 12:15, trying to freaking time a 5-minute dip here off 761, and it just fell through, and I lost $25 off the top. Very small numbers, regardless, like of dollar amount. $25 is nothing to what I'm making now. I can make that back in a small scalp. It's just the fact that I came back after I said I was done. That like I disobeyed my own discipline. Like I disobeyed myself, and I kind of got mad at myself for coming back and losing money. And that's just one of the struggles with day trading, is like, how do you know when to walk away, or if you're leaving money on the table if you walk away earlier? And so what I kind of have come to the conclusion is my strategy works best in the morning. My strategy actually works better 9 a.m. to about 11 a.m. Before that is somewhat profitable, maybe something I can work on. And then after 11 a.m., in most markets, it's really too choppy for me. And I actually end up, it's pretty much a 1-to-1. I take one step forward and one step back after about 11 a.m. So I think what I'm going to do is actually going to stop trading after 11 a.m. Because after 11 a.m., I start to be like, okay, I'm up this amount in the day, I'm feeling good. And then if I keep trading, if I take a loss, it hurts even more, because the mindset shifts from trying to make money to like trying to conserve the profit on the day. And so if I start giving that back, it hurts even more, because I have that thought of like, I could have just walked away at 11 o'clock, saved myself another 4 hours of trading to the close, probably save myself money and save myself sanity and my mental health. So I think from here on out, around 11 a.m. is going to be where I call it, unless it's a really big outlier day where we have huge gappers and there's a lot of volume in the markets, like something that happened with like the GME market, or the oil runners, or the weed runners. Unless we have something like an outlier like that, I'm pretty much going to be stopping 11 a.m. No later than no later than 11:30 a.m. if there's something still kind of looking good. But I think I'm pretty much done trading midday and even power hour. I just don't think it's really worth it for me. Maybe power hour. I could maybe trade power hour, but because it does have a little bit more volume than between 11 a.m. and 3 p.m. But like, I still have that mindset of like, dang, like I should have just never came back. Like if I lose money, it just hurts even more than if I lost money at 10 a.m. or 9:30, because at 10 a.m. and 9:30, the market just opened, and there's still going to be opportunity, and I can still get green on the day. But if I'm green on the day and I come back at 3 o'clock and I lose about a third of that or half of that, it's like, well, dang, do I keep trading and risk losing the rest of my profits, or going deeper in the red than I already am, because I'm trying to dig myself out? And the market is about to close in under an hour, and there may not be another opportunity, and now I'm here stuck with a loss. So it's just, I think the mindset shift, I think it'll save me a lot of mental energy, save me a lot of time, and it might actually save me some money if I do stop trading at 11 a.m. on most days. So I think that's what I'm going to be doing. But I will get up at around 7 a.m. And sit down around 7:15 or so. I get up around 6:45 and then sit down around 7:15 with my coffee, and I start looking at the market. So I'm still going to get up that early, and I'm going to probably be trading small size pre-market, but still going to be trading pre-market, and then pretty much just wrap it up by 11 a.m. That's enough with that. We're going to go to the video. Actually, I already have it up here. So yeah, right here, beat at the open, had a nice gap, 4.6 up to $6. So gap and go trade. The daily didn't look too bad, had room up to 7, but we didn't actually end up getting up to 7. So the first thing right now at the first open minute candle is I'm going to test the order. So I'm only putting in 100 shares, and look, it's not getting filled. It fills me about 20 seconds late, and so that's already a red flag. So I'm not going to be sizing up yet until the fills are quicker. So still 100 shares. This one was actually a lot cleaner going into the highs, and so here I jump up my share size to 250. So there I actually added into the high. I had 640 and then I added at 650 to double my size. I wanted to see a nice huge green candle up to 660, 670, but we didn't get it. And it starts selling off and I take a loss there. That was about it's about maybe a $75 loss. I get back in on the dip real quick. So pretty much a panic dip buy off $6. So I take the loss there and I'm getting back in. That's how you got, if you're a scalper, this is kind of like how you got to trade. You just got to have no remorse for cutting your losers and just looking at that next opportunity. There I'm getting a bounce off 6, 750 shares at, what was that, 610. Selling that one position actually sold for only a half a cent. Still holding 500 shares and taking the rest off for 13-cent gain and the other one for a 16-cent gain. So very good scalp there off the low. Very good stuff. And so I pretty much recouped the loss that I took there. Now here I'm going to get back in for the bounce off 6. 604, 605, selling at 608. 611. That was another nice one. So here now I'm looking, since it bounced right off 6, I thought it was going to break below 6. It was testing $6 twice. I thought there was going to be a quick dip, a quick flash down to 5.8, and then somebody's going to scoop up those shares with me at 5.8. It's going to reclaim 6 real quick, and we'll see that red to green. That's what I was thinking. But we never actually broke below 6. It looked, I was waiting for it. I was waiting so patiently. It never came. It looked so good that it was going to break, and it just didn't. See, you have a lot of buyers coming under here, but you see that second candle here is a lot lower volume, so doesn't necessarily need to break 6, but I thought I still had a little bit more room to go down. So here, yeah, rejects that level, and we get that break of the 9 EMA back to the upside. Now it's a potential red to green. So I'm in at 633. I think I'd take a small loss here before it goes. So there I'm taking, I'm actually adding to my position at 634 for that red to green. It doesn't go immediately, so I take that half off for a small loss. Now it starts to go. Still in 500 shares. Now I'm adding 1,000 shares here. Another $6,000 here for the break of the highs. This is a pretty aggressive position. This type of stuff makes me a little nervous. I'm in 1,500 shares at 641. This is like a $10,000 position, and I add another 500. No, I sold 500. Then I add 1,000 here for the break of the high. And it's still hesitating. It's not explosive. I want to see an explosive move ripping up to 7. I want to see explosivity. That's what I want. And it just doesn't have it. So it just took so long. So I took a small gain there. Still holding 1,500 shares. I get really nervous when it hangs around here too long and it doesn't break out and I'm in big share size. Because if I'm in big share size, it needs to I need to be in the green. I need to be already taking profit immediately, or else I'm going to be in a high risk trade if I'm holding it, because I'm holding it into a high a day break. I'm not holding it off a dip. If I'm holding it off the dip, I can give it a little bit more time. But if I'm trying to catch a breakout, it needs to be breakout or bailout, especially at the open, because sometimes you can get some nasty, nasty flushes. So there we go. As it's breaking, literally as it's breaking out, I'm taking it off at 63, 62. Pretty much took it all out. It just didn't have an explosive move. It needed to explode to 75. But I still made $223 on it, which is good. Which is good. Puts me up to 273 right there. Now I get in here, this next candle, 1 minute pullback after a fresh breakout on high volume, looking for some potential continuation. Just got in at 51, already up about 8 cents. I took it off, but then I added it back. I don't know why, actually. And then oh man, I just added super aggressively, another 2,000 share position. Oh, this is aggressive trading. And if this would have went parabolic, if I could have got 20 cents on that, that's another $400 winner. So here I'm getting in at 57. I'm getting aggressive here. I'm getting real aggressive. And boom, boom, boom. As it's breaking out, I'm adding 2,000 shares and taking it off immediately. It doesn't go. And pretty much a break even there. That was my small loss that I showed you guys on Trade Journal of a quick $15 loss. But, you know, the risk reward setup was there. I lost $15, but if it broke the high and gapped 10 cents, I would have been up $200. So, you know, the risk reward was there. Tried to get back in on the dip there, but this is where it gets a little bit risky because it did reject the high. So if it rejects the high and now it's testing again, that's where you could get a flush because it shows weakness. And so here I'm in 1,000 shares. I'm looking for that break at that high again. I'm looking for maybe this time it could be a little bit more explosive. But it rolls over on the next candle and I take a loss. So yeah, there it goes, rolls over. I would buy the dip there, but it did have room down to 5.8, so that's why I was a little bit nervous. There goes MOTS. So we're gonna stay away from that. I think that was it on BEAT. Yeah, that was it on BEAT. Here goes SNTI. So I'm kind of monitoring it. I should have got in for the break of 550. That was a really good trade. If you could have got that break of 550, it's pretty explosive. Those explosive moves are what you want to see. That's how you know stock is strong. Boom, 550 to 575, 587 into a halt. And I didn't trade it yet. So it's going to resume there. Now right under 6. I kind of get in a quick scalp there, but I sold way too soon, right before 597, before the huge pop. So I don't know what I did there. I mean, I just didn't give it any room to run. I was a little bit too conservative there. So here it's really kind of, you got like a crazy pin bar here. So, but it's holding, it's not turning red. So somebody's supporting it right here at the previous high. So that's why I get in, quick 250 shares for a quick scalp. Boom, from 54 to 606. Sorry, 94 to 606. So 12 cents there, quick 30 bucks right there. Here we're going to get that first red candle after this huge move. I get in for another quick scalp for another 8 cents. Really quick trading. And I get back in again for another dip, but this one doesn't really hold. And bounce off the low as well. I only got 3 cents on 250. And then here I get in again, I think, for that bounce off that low, and I got 5 cents there on 250. So I'm up 286. I really underperformed the SNTI because that 550 move and that unhold. If I had like 1,000 shares for that break of 6, that could have been a really nice trade. So here we are kind of forming a bull flag on that 90 EMA. And right there was the entry. It broke the low and it reclaimed. So if it breaks the low here on a bull flag, but reclaims, that is a strong move. I mean, it's a strong sign that there's support. And so you want to get in and risk the low. Because if the stock was weak and it breaks the low on a bull flag here, and it breaks the low and it just flushes down, then if it flushes down and holds the low, you don't want to be buying that. You don't really want to be buying for a reversal. You only want to buy the reversal if it breaks down and it's not holding the low of that candle and it starts to form a bottoming tail, or in the next candle it has a huge engulfing green candle. So where the green candle reclaims that entire move of that previous red candle after breaking a low. And that would be a potential reversal sign. And if it's on a front side move, like it is here, that's where you want to get long. And you want to get a little bit of aggressive because the risk reward is there. Because you're only risking here, I'm going to be risking 10 cents for a potential break of 6 maybe or more. So, 10 cents for 20 cents or even more. That would be minimum, because you could potentially, if it's a strong market, you could potentially get that break of the high, and then you're taking a 50-cent profit or a 60-cent profit off a 10 or 15-cent risk. But here I kind of butchered that. I needed to actually have a longer hold time. That's what I needed. My mind already shifted to being conservative, and we did get that curl up to the high here. So if you did get in for that reversal, you'd be up 50 cents. If you can hold for a couple minutes, you have that longer hold time strategy, you'll be up really nicely. With 1,000 shares, you'd be up $500. That's some good money. So here, kind of take a scalp there, trying to get that break of 650, but I don't know. I mean, I'm already mentally checked out at this point. I didn't like SNTI from the previous day, so that's why I kind of stayed away from it, but I did probably leave some money on the table if I would have just kind of get a little bit aggressive, but I guess I kind of just wanted to lock up the green day and not really take as much risk after 10 o'clock or so, or after I got nicely green. It's definitely harder to, get zoned in on one ticker and then have that die, like it happened on Beat, and then shift over to SNTI or a different stock and try to get a feel for its personality, because you're so used to a different stock. This may not move. This definitely won't move the same as Beat would, and so you kind of got to get into a different mojo, and sometimes that can be hard. So that was it. I was actually up 300 and gave back about 25, 23 off the top there on trying to catch a dip here, and I was looking for a move up to 8. I don't know. Only 100 shares, so very small size. 100, I think it was in 200 shares. I think I hit it twice. So small losses there. That's going to be it. So that is the recap video for today. I'm going to be making some changes. Not going to be trading as much midday, and I may or may not trade power hour. I'm not sure. I still have to think about that. Really depends on the market sentiment. And if I have a cushion, or if I'm nicely green in the mornings, or what the situation is on the day. So that's going to be a change. I'm now on Trade Journal. It's going to be my new trade analytics software, which I'm going to have a video coming out on Saturday. And I also have a special surprise for all of my subscribers and future subscribers. So stay tuned for that. There's going to be a video coming for a free gift for my subscribers, because I appreciate you guys so much following my journey, giving me words of encouragement, and helping me become a better trader. I appreciate it so much. So I will give out a free gift to give back to my subscribers. The video will be coming out soon. Expect something early next week. So I'm just going to leave the video with that. Hope you guys did well today. Enjoy the rest of your night. Also, if you're not yet a subscriber, please subscribe, hit that like button. I'll see you guys on the next recap tomorrow, which is Friday, last day of the week. We're going to finish strong. All right, peace.